Thanks for visiting my channel. In this video, first of all, we'll talk about different RRSP maturity options available to you upon your retirement, and I'll give you 10 tax tips or strategies you can use when converting RRSP to RIF. When you retire, you have 3 options for your RRSP. Option number 1, you can deregister the entire RRSP in lump sum and receive cash payment. Since RRSP withdrawals are 100% taxable, you'll be fully taxed at your marginal tax rate in the year of withdrawal. Option number 2, you can convert RRSP to annuity. Annuity is a contract where you give lump sum money to insurance company in exchange for steady guaranteed income for life or a fixed period of time. Annuities can be life annuity, a term certain annuity. One important thing to remember about annuities: once you purchase annuity, the decision is usually irreversible. Funds are no longer available to you and you cannot change the term of the contract. Third and the most popular option is to convert RRSP to RIF, a registered retirement income fund. By December 31st, you turn 71, you must mature your RRSP to RIF. RIF is similar to RRSP account where the investment growth tax deferred until withdrawn, but it's different than RRSP because you cannot make contributions to RIF account. Before we start talking about 10 tax tips or strategies available to you when converting RRSP to RIF, if you are new to this channel, my name is Tanveer Chaudhary. I'm a certified financial planner and real estate investor. I make educational videos regarding wealth building, financial planning, and real estate investing. There are mandatory annual minimum RIF withdrawal that must be withdrawn from RIF account every year. Even though you must convert your RRSP to RIF by the end of the year you turn 71, you don't have to make your first RIF withdrawal until the end of the year you turn 72. Mandatory RIF withdrawal amount is calculated based on your age at the time of RRSP to RIF conversion. Mandatory RIF withdrawal amount is 4% of your total RIF balance at age 65 and 5.28% at age 71. You're also allowed to have mandatory annual RIF payments calculated based on the age of your spouse. You must elect to do so when you set up the RIF, and this decision cannot be changed after. Mandatory RIF payments are usually lower if the spouse is younger than you, so you can have lower taxable RIF payments for a longer period of time. You are also allowed to convert RRSP to RIF before age 71. This, along with calculating RIF payment based on the younger spouse age, you can have lower taxable RIF payment for a longer period of time, which can help you level out the tax bill in retirement. This can also help you avoid old age security clawback and GIS clawback. You can watch my video how to increase the guaranteed income supplement, how to avoid the old age security clawback, and reasons to take CPP at age 60 after watching this video. There is minimum mandatory annual RIF withdrawal amount which must be withdrawn from RIF account every year, but there is no maximum amount. Unlike RRSP, there is no withholding tax on the minimum mandatory RIF withdrawal amount. However, there is withholding tax payable on any amount above the mandatory minimum RIF withdrawal payment. There is 10% withholding tax on the first $5,000 of RIF withdrawal above the mandatory minimum RIF withdrawal amount. There is 20% withholding tax from amount $5,000 to $15,000 of RIF withdrawal, and there is 30% withholding tax on amount above the $15,000 of RIF withdrawal done in a single transaction. If you have spousal RSP, you must convert into spousal RIF. Spousal RIF also require minimum RIF payment, same as the regular RIF. Important thing to remember that there is 3-year income attribution rule for spousal RIF, same as spousal RRSP. Minimum spousal RIF payment are not subject to the income attribution rule, but any income withdrawn above the minimum spousal RIF payment are subject to the 3-year income attribution rule. Attribution rule applies if the contributing spouse contributed this year or any of the previous 2 years, and spousal RIF income is withdrawn by the registered owner spouse within 3 calendar years. In this case, the spousal RIF payments will be attributed back to the contributing spouse. If spousal RIF income is withdrawn after 3 calendar years, the spousal RIF income will be taxed in the hand of registered owner spouse and not the contributing spouse. Unlike RRSP, RIF income is eligible pension income for $2,000 pension income tax credit for individual over the age of 65. Therefore, you should consider converting part of your RRSP to RIF as early as age 65 for both you and your spouse. Unlike RRSP, RIF income is also eligible income for pension income splitting. You can split 50% of your RIF income with your spouse. In order to make the mandatory annual RIF withdrawals, you might need to sell some investments every year, but if you don't have immediate income requirement and you don't want to sell the investments you hold, you might choose to make in-kind RIF withdrawal first to your non-registered account at fair market value and then move into your tax-free saving account in order to satisfy the minimum RIF withdrawal requirement. In the event of the death of the RIF account holder, if the spouse is designated as a beneficiary of the RIF account, spouse can transfer the RIF balance tax-free to their RIF account. But if the spouse is designated as a successor annuitant, not only that spouse can transfer the RIF balance tax-free to their RIF account, but spouse can start receiving the RIF payment from the spouse RIF account. 10th and the final tax tip I can give you, the RIF balance can be rolled over tax-free on the death of the first spouse, but upon the death of the second spouse, the RIF balance is 100% taxable in the year of death, and estate taxes will be payable by your state at your marginal tax rate. If your total estate value is over $250,000, which will put you in the highest tax bracket in Canada, which is 53.5%, therefore, you can potentially lose over 50% of your RIF account to estate taxes in the year of death. That's all for this video. If you think information like this can benefit someone, please share this video with somebody you know. Also, if you think you learned at least one new thing from this video, all I'm asking is to like this video and subscribe to this channel so it encourages me to produce more valuable contents for people like you. Thanks for watching and see you in the next video.